stop there. It's some good news for investors. GrowthPoint South Africa, the largest JSE-listed real estate income trust, has declared a final dividend. This despite the impact of the COVID-19 pandemic on the group. In its results for its financial year ending June, it says it will pay a final dividend of 60 cents per share. This equates to a payout ratio of 80%, which is within the rate tax rules. Now, the rules state that at least 75% of distributable income needs to be paid out to shareholders. The news comes as many of GrowthPoint's JSE-listed peers opted not to pay out dividends as a result of the pandemic fallout. Now, I want to get more on this company and its results. GrowthPoint South Africa's CEO, Estienne de Klerk, joins me now to unpack that. Estienne, thanks very much indeed for your time. One number that may tell us part of the results story, your office space vacancies, just under 20% from over 15%. How much of an impact did that have on the results?
Clearly, it's not got a positive impact. It's a very tough environment, specifically in the Gauteng region, where we've seen the Gauteng economy very badly impacted by COVID. Interestingly enough, Cape Town and Durban, those vacancy factors are significantly lower and I would say in more normal environment. So the impact, is material, and we need the economy to grow, and we also need people to get vaccinated so that South Africa can get back to work.
Yeah, and that's exactly it, isn't it? I mean, this hybrid work model, what's your expectations? I mean, of course, you're factoring in that when you're looking ahead. Could this remain, this home from work, work from home situation, could it remain very strong in the post-pandemic world? What's your expectation?
Well, our expectation is that offices will probably be used slightly differently. Big corporates still want a head office. They still need offices for collaborative working, for training, for employing staff where they can teach them, the way of that specific corporate. And it's also a point of reference and part of the branding of those corporates. So we do believe over the long term, that office will remain and that as the economy grows, we'll benefit. Now, GrowthPoint's clearly very diversified. We've got more than 39.9% of our assets offshore today, Australia, Eastern Europe, and the UK. And we have various other businesses within the South African environment, which include retail offices, our investment in the V&A. We have a fund management business and a trading and development business, all of which obviously diversifies the risk for the company to any specific sector.
Oh, no, indeed. I mean, you're not in the property space yet, like you mentioned. With tourism, what happens there does invariably affect you. When you look at what happened to the V&A waterfront in terms of local and international tourist numbers plunging, you obviously, raise some eyebrows on there. But what's your take on what's happening on that side of things?
Yes, so clearly the V&A is quite dependent on tourism. We do have a very large office portfolio, which is very well occupied with strong demand. And in fact, we're still expanding. We're building offices for Investec, and we've just completed office building for Deloitte's in that precinct. But, a third of the tenants are certainly on the retail side, the restaurants, the tourist-dependent kind of operators. They do need the tourists, and we need South Africa to get off the red list from a tourist perspective so that we can welcome those tourists back for South African summer. And the V&A is the most visited and probably the most valuable property on the continent, and a great advert for our country. So it would be great if we could see tourists back, and clearly the V&A will benefit. The earnings from the V&A has reduced by close to 40% to GrowthPoint. And, from our perspective, those initiatives to get South Africa back on the tourist map is quite critical.
You speak about the diversity and the student accommodation property market. You've got competition approval for your venture. Where do you think this student accommodation market is going, Estienne?
Yeah, so the Student Accommodation Fund is a new initiative in our fund management business. And just to explain that, we invest together with institutional investors, local and offshore, into funds. So we've got a fund that focuses on Africa called Lango. We've got another fund that focuses on the healthcare property sector called GrowthPoint Properties Healthcare. And then we are busy originating this purpose-built student accommodation fund. Now, we do believe there's a big demand for the product, for a quality product, and as such, we also believe there's an opportunity to consolidate the market and create a point of reference, if you'd like, into that investment space from a real estate perspective. Government obviously has recognized the need as well and supports it very firmly with the NSFAS grants to students. So we believe there is a good opportunity. We've also seen, quite a few investors indicating their willingness to want to invest into this fund. So hopefully by the beginning of October, we should have this fund up and running, I believe.
All right, thanks indeed for that. GrowthPoint SA CEO Estienne de Klerk, thanks indeed for those insights on those latest results. Now,